Hi everyone, and thank you for joining us today. My name is Tina, and I am the Capability Building Coordinator for Connecting Up and TechSoup New Zealand. Connecting Up is a part of the Info Exchange Group. Info Exchange is a not-for-profit social enterprise that has delivered technology for social justice for over 25 years. With over 100 staff across Australia and New Zealand, we tackle the biggest social challenges through the smart and creative use of technology. I'd like to welcome you all to the webinar, Making End of Year Reporting Productive, which will be presented by Mick Devine from CalCSA. We'll start with a little bit of housekeeping. All lines are muted, so if you have any technical issues, please type it into the questions box on your webinar panel and I'll be able to assist you through there. If you have any questions during the session, please also type it into the questions box and Mick will answer them in the Q&A section at the end of the webinar. Please note that your comments and questions will not appear to the entire group. If you are on a Wi-Fi connection and have multiple programs open, this can sometimes affect the quality of the audio and video of the webinar. If possible, please close all other programs to help you have the best experience. Please note that the webinar is being recorded and a link to the recording and the slides will be sent to you shortly after the webinar ends. Before we start, I'd also like to remind you that there will be a short survey at the end of the webinar. We'd appreciate it if you took a few minutes to provide us with some feedback. That's all from me for now. I'll pass it over to Mick to get things started. Thanks, Mick.
Thanks, Tina. Good morning, everybody, or good afternoon to those of you in New Zealand. What I want to do today is just give you some ideas on end-of-year reporting and talk about some of the things that I put in end-of-year reports and a quick look at how we produce those in CalCSA and make that process easier. So I think, firstly, the whole purpose of end-of-year reporting is about looking back at the year that you've just completed and seeing how well did we do, what worked, what didn't work, and then also looking ahead at next year and thinking about what we're going to change in the organization, what's going to be different, because the whole point of any sort of management reporting is that it should prompt at least questions, if not always change. You should at least be saying, okay, is this working? Is it not working? What do we need to do differently to make it work better? So let's have a just quick overview first of some of the things about looking back at reporting. And I think in any of these reports, one of the key things we always need to keep in mind, and it's sometimes easy to forget, is who's the audience for the reports? You know, is it a program manager who needs detail on her particular program? Is it a department manager who maybe wants an overview of everything that's happening in that department and details on some of it? Or is it senior management or a board who want an overview of what's happening in the whole organization? So I think whenever you're putting together reports, it makes sense to customize them specifically for each audience. You know, the same reports don't always make sense to everybody. And if we start thinking about, you know, income and expense reports, and probably the first place that most of us start is comparing to budget. You know, how close did we come to the budget? Did we spend all the grant funding that we were allocated? What were the variances between actuals and budget in those reports? So again, that will help us A, budget better next year, and B, decide whether something should continue next year or not. You know, if we have something that's a big drain on our expenses, is that a function we should be doing, or is it a core part of our organization's business, and therefore it's a matter of finding the right amount of funding so that we can continue that. And KPIs can be very important in end of year reporting, and KPIs tend to be not quite unique to every organization, but certainly they what's important to a particular organization can vary over time. If you're in disability services, it may be about the number of clients you're servicing, it may be about the average revenue or average cost per client, that sort of thing. If you're in accommodation, it may be the number of bed nights that you provide each year. There are different, and every accommodation provider will probably find that interesting, but depending on whether you're a new and growing organization or one that's been around for 50 or 100 years, the stage of your life cycle can also make a difference to which numbers are important. So it is about picking the right numbers for your organization and then reviewing them, comparing what's happened. And now I've got review monthly there on that slide. And what I mean is not just an individual month, but look at the spread of the whole 12 months of the year. Sometimes as we go through the year, we look at each month individually. So at the end of January, we look at January's reports. We look at March reports at the end of March. And, quite often we'll look at year-to-date reports at the same time. But I think the end of the year is a good time to look at a report that shows you each month side by side, so you can look at the trends of what's happening, look at the seasonal variations. Are you in the sort of business where you have higher demand for your services at different times of the year? If you're involved in homeless care, for example, it might be winter time, there's more demand, or other seasonal factors that are more related to the locality you're in. Are costs increasing over the month? And being able to follow those months side by side really makes it easier to compare. And I'll show you some examples shortly. And then, as well as comparing to budget, it's worth comparing your results to the previous year as well, and being aware of what's gone better this year, what's worked, what hasn't worked. And again, it's about learning and understanding what's happening in the business so that you can do things better the following year. And then don't forget that all organizations, even not-for-profits, need cash to function. And so it's important to look at the balance sheet side of things as well. Look at your cash reserves. How are they comparing to last year? Do you have enough cash reserves? Could you cope if there was a sudden decline in your income? A grant that you were expecting doesn't turn up, or if you're in one of the sort of consumer-driven sectors, what happens if a competitor comes into town and starts chasing your customers? How would you cope with those sort of things? So making sure you've got adequate cash reserves is important, but also looking at all your assets and liabilities, comparing them to last year. Are your creditors staying stable? If they're not, it's possibly a sign that the suppliers aren't getting paid, the GST's not getting paid, or not getting paid on time. And we all want to do the right thing, and especially if you're in senior management or a board position, you need to make sure that those things happen, and you're aware that they're happening, and everything's paid on time. And then, when you're looking at this stuff, especially at the higher management level, you want to focus on the big stuff, not the small details, and it's about keeping people accountable and looking at what's happening. And if I'm doing reports for senior management or a board, I like to summarize, provide overviews. So this is one of the summary reports out of CalCSA that shows one line for each program: income, expense, profit, budget, and actual for the month and for the whole. In this case, I've got the whole year because I've run it on the last month of the year. But it makes it easy to run down, see which of these programs have got problems compared to the budget, and which ones are okay and under control. And then you might ask for more detail on the problematic ones. And so I think at the senior levels of management, you want that summary information. Even when you're looking at a profit and loss type report, you don't need every single line item on there. It's about grouping things, summarizing them, and you only look at the detail if there's problems. But in other parts of the organization, if you're a department manager or a program manager, you want that detail, and you want to have, and depending on your responsibilities, you may need the income and the expense side, or maybe you just need the expenses because that's the part you control. So give people the reports that make sense to them, that helps them manage their areas. That's just a KPI chart of wages compared to turnover, showing actuals, budget, last year actuals, and I'll show you some more reports in a moment, and we'll have a look and talk about some of the things that are in them. But let's first also talk about looking ahead. And I think sometimes when people do end of year reports, it's very easy to focus just on the year that's passed, but I think it's an opportunity to start looking forward. You've probably just prepared a budget for the next year. Let's look at that, work out what's happening for the next 12 months, and again, right level of detail for each person, but also look at the balance sheet forecast going ahead. Make sure you know what's happening there. Look at the cash flow forecast so that senior management board can be satisfied that the organization is going to be solvent and going to stay solvent. Now, let's just bring up this set of reports that I prepared earlier. So I've got a cover page on there. I mean, I'm sure you can do a prettier cover page than me. But excuse me. So the sort of things that I would be preparing for comparing actuals to budget are something like this, that's showing the full year budget compared to actuals, and then what's unspent or the variance. So, we had a budget of 1.4 million, we only spent 950,000. What are the implications of that for your organization? Does that get carried over to the next year, or does it get returned to the funding provider? Those are the questions to ask. Those are the things that management needs to know. Did we overspend on any of the expenses? In this case, we managed to keep just under the budget everywhere. I've added some KPIs onto the bottom of this report. So my My admin to revenue KPI is actually fairly low at 1%. I'm surprised at that. But my cash reserves, I've got cash reserves of 240 days, which is about 8 months, which is generally if you've got 3 months is considered minimum, 6 months is ideal. So that 8 months that we've got here, that's ample, and that's about having that amount of cash available in the case of emergency, so that if your income dried up today suddenly, you'd still be able to pay wages next week, pay the rent next week, next month, etc. And then the wages to turnover percentage, a key KPI in many not-for-profit organizations, because as service organizations, wages is a major component of total expenses. So it's important to see where that sits relative to the income of the business. And then you can run that same report by program for the individual program managers. And I'll just skip through this one quickly because it's just a few detailed pages of the same thing. Now, this is where I was talking about looking at months side by side. So I've got the 12 months, July to June. So I can see that income was high in July, but then it was fairly stable each month after that. And our expenses were fairly stable most months of the year. There was a bit of a dip in staff costs in January and February, but and again in May, presumably for some sort of seasonal reasons, but most of the other expenses were fairly stable. We can see the full year total, and in this example, I've compared that to the approved budget, the one that's been signed off on by the board at the beginning of the year. While it's fairly common to have an approved budget at the beginning of that you set at the beginning of the year, and a current forecast that you modify during the year, it's important that end of year reports that are compared to budget should be compared to that initial budget that was set this time last year, so you can see how things have changed since then. And the fact that things have changed isn't necessarily bad. It's just that expectations changed, things that you thought were going to happen didn't, but it's about looking at those variances and understanding them, and then improving the budgeting process going forward. I mean, sometimes things happen that are outside of our control, and it's not about us doing well or not. Now, the other thing I've done here in this report is I've actually summarized the account lines as well, because senior managers don't need to know how much we spend on postage stamps. They don't need to know how many litres of fuel that we've used in our cars, etc. And the high level overview is sufficient. If I was providing this report to a department manager, I might expand those out and put more detail in. But it's about having that flexibility and giving the right reports to the right people. And again, I've put some KPIs on the bottom of this report, and I find them useful on this report because it makes it easy to see trends in those KPIs as well. Our wages to turnover starts off at 84%, drops to 72 in the middle of the year, and then it's back up at 83 at the end of the year. And maybe that's a seasonal pattern in this organization that happens every year, but just be aware of it, watch it. Sometimes things can creep up without you noticing when you're looking month to month, but by looking back over the whole year, you can see what's happening and understand those patterns and take action earlier rather than later. As I said, just comparing to budget is one important thing to do, but it's also important to look at your results compared to the previous year as well. So in this case, I've just got actuals compared to the previous year and a dollar variance and a percentage variance. And some people like dollar variances, some people like percentage variances. They both tell a story. I might look at that and say 3%, 4%. That's not a big deal. I might say $35,000. That is a big deal for us. So having that information there and displaying it the way your audience wants it, the way your audience needs it, is important. And then the same thing with the balance sheet. So here I can see our cash at bank has increased. And again, I've summarized the balance sheet in this example just so that I can present it, especially also if you're presenting to non-accountants, people who don't necessarily understand all the world of finance, and sometimes it's easy for those of us who are accountants and have financial knowledge to just assume that our audience does. And if your board members on your not-for-profit are anything like most of the ones I've come across over the years, they're not on that board because of their financial skills. I mean, some of them are, but often they're there because of their commitment to the cause, because of their involvement in the organization, and all sorts of other reasons and other benefits that they bring to that organization. So we need to try and present reports to them in a way that they can understand. They can see that, I've got $91,000 worth of tax and super outstanding here, whereas this time last year we'd paid all that off. Why is that different? It's about giving them the information so they can ask those questions and understand what's happening in the organization. Where did our money go? This is a report we've put in Calxa to try and help those non-accountants understand that the profit the organization makes doesn't necessarily translate into a change in the bank account. So in this case, we've made a profit of $90,000 and our bank account's actually increased by $129,000. And what explains the difference? Because we've got more super, PAYG, GST outstanding. We've got some creditors that we haven't paid. We've taken out a small loan and we've dumped $100,000 more into our short-term investment account. So it's about being able to show that to people. We can also show it as a chart. Charts are good for end of year reports, just as they're good for end of month reports. So we've spent our extra money has gone into the bank and into those short-term investments, and we funded it by not paying the super, the PAYG, taking out that small loan, and not paying the GST. And they're not necessarily overdue. They might, if we're on monthly, there's generally going to be something that's due in on the 21st of July, or if we're on quarterly and our tax agent's lodging it for us, it's possibly not due till August. So the fact that there's something outstanding isn't necessarily a problem, but it's about being aware of it and knowing what's there. And again, charts can help you to review the expenses in the organization. And in this case, I've broken mine down by these headings of staff, operations, marketing, office expenses. And you can clearly see that staff costs are what consumes most of the revenue in this organization. It's about staff. It's obviously a people-centered organization providing services to the community. The program summary. So this is the report I showed earlier. I like this one for senior management, for board reporting, so you don't have to do detailed profit and loss reports on every single program. I've seen people in the past do 30, 50 page profit and loss reports out of MYOB on every single job that the organization has or had during the year, and present that to a board, and board members don't have time to read that. They get lost in the detail, but by summarizing that information, giving them the overview so they can see what's happening, where there's likely to be problems, then they can have a sensible, informed discussion with the finance team about what's happening, or with the manager of that program to talk about what went wrong, what went well, what are we going to do differently. Expenses by program. So and you could run this for expenses, you could run it for any individual line items as well. But which of our programs are consuming all of our expenses? And this one here is taking up more than half. This one's taking up a quarter. So again, it gives you a good visual clue to the size of the different programs or different departments in the organization. So it's all about looking at that information and looking at it from different angles, presenting it from different angles so that you can see what's happening and where we're going. That's that wages to turnover. Again, compare the actuals against the budget, and it looks like in this case, we were way over budget for our wages every month, and we were over last year as well. I mean, just looking at that, I'd question why the budget was set so low, but that's the way it is sometimes, yeah. And then we talked about looking forward to the next 12 months. And I think one of the key reports there is that cash flow forecast. Board members in not-for-profits have got the same responsibilities as company directors when it comes to trading while insolvent. And the only way you can know that you're not insolvent and not going to become insolvent is by forecasting your cash flow and looking at what's happening with it. And in this case, I can see my bank balance month by month into the future. We've got between $250,000 and $350,000 in the bank. As a board member, I can look at that and I can sleep at night knowing that, barring unforeseen circumstances, this organization's solvent and we don't have to stress about cash flow problems. I've worked with plenty of organizations over the years who do stress with cash flow problems, and I'm sure you don't need my recommendation that it's something to be avoided. It's but sometimes it can't be avoided because funding dries up, funding changes, and it's a matter of managing that. I did some work for. We had a client in Sydney for many years in the a not-for-profit organisation in the film production area, and they lost a big chunk of funding when there was Arts Council changes a few years ago, and because they were forecasting their cash flow, they could see, in July, they could see that by January, February, they were going to run out of cash and have nothing left. They did put some effort into finding alternate sources of funding. They weren't successful in that, but because they knew the cash was running out, they knew when it was going to run out. What they did was an orderly shutdown at the end of December. The staff all got paid their entitlements, the suppliers all got paid, and the remaining assets got transferred to another not-for-profit organisation. It's never good to see an organisation close down like that, but better to close down in an orderly, managed way than for a crisis just to suddenly appear because nobody's looking at the future and what's happening. So anyway, that's enough of my preaching about doing a cash flow forecast. I do it from time to time because I don't think enough people do cash flow forecasts. You can also look at that same information with numbers. Generally, for board members, I wouldn't normally suggest providing them with the numbers unless they ask for it, or unless the treasurer wants to see the numbers, then give them the numbers. But for most board members, the chart's sufficient. It tells them whether there's a problem or not a problem, and it's clear, it's visible. You don't need to be an accountant to understand it. I mean, once you've looked at a couple of cash flow forecast reports with numbers, it's not rocket science either. You've got a bank at the beginning, you've got income coming in, expenses going out, and you've got some liability movements. And again, I've summarized these because you don't, even if a board wants the cash flow forecast with the numbers, they generally don't need all the detail. And then next year's budget. And I like to look at my budgets in a way where I can see the 12 months, month by month, and I've got a projected total here, and then I compare it to last year's, either last year's budget or sometimes last year's actual, depending on what's most meaningful to me or to the organisation. But it lets you see what those trends are. It lets you see what changes you're forecasting compared to last year, and then you can start thinking about how that's going to impact the organisation and what differences you're going to make. And the balance sheet forecast is also important to look at. You need to understand not just the income and expense going forward for the next 12 months, but what is happening with that bank balance, what is happening with your payables, super, any assets that you might have, loans that you might have, what's the prediction for those over the next 12 months? And then I also think the end of year is a good time to do a multi-year look at what's happening in your organization. And this is one of our 5-year reports. And I could have just done the last 5 years of actuals, but I chose the option to show the last 4 years of actuals and next year's budget as well, so that I can see, how's our funding changed over the last 4 years and what are we expecting for next year. How have our expenses changed? So our staff costs have been reasonably stable for the last 4 years, and we're expecting an increase next year. I think it's a good way to just get that overview, get that picture over a longer period of time so that you can see the context of what's happening. Again, it's another extension of what I talked about earlier, how, sometimes when you're looking at just monthly reports as you go through the year, it's easy to miss the big picture of the trends that are happening from month to month. And something like this report helps you see those trends that are happening from year to year. Is the organization growing year by year by year? Is it staying stable? Is it declining? And there's probably nothing wrong with any of those three options, but I think it's about being aware of them. And sometimes you're not aware because you just look at the reports from one month to the next or from one year to the next, but looking at them across that 5-year range, I think gives you a different perspective, different overview of what's happening in the organization. Now, that's my reports. Let me just very quickly, actually, I'll go back to my my slides for a moment. When I put that set of reports together in Calxa, and I'm not sure how many of you have seen Calxa, use it, are familiar with it, we have a concept of report bundles, and the idea with the report bundle is that it saves all the configuration options that are in your report. You can change the order, you can change the sequence, but once you've created that bundle, it's just one click to generate it. And now that I've created that one for this year, at the end of next year, that's all ready to go. The dates, all I need to say is, change it to June 2020, and one click, I've got my end of year reports already done, no effort. I mean, in reality, it's probably, I'd probably, have a think about, okay, what response did I get to these reports? Which ones did people find useful? Is there additional information I want to put in there? But the core structure of what we've got is there. So I'll give you a quick look at, and I'm not going to do a full tutorial, but just for the benefit of those of you who haven't seen Calxa before. So it connects to your accounting system. So that's Xero, MYOB Account Rights, MYOB Essentials, and QuickBooks Online. And we bring in the chart of accounts, the actuals, the jobs, the classes, etc. from there, do budgets in Calxa, and then reports. And there's 120 something different report templates to choose from. But you can filter them quite easily. So, I want something with actuals and budget, with numbers and profit and loss, and then, there's different variations on it, on each one. Pick that report. Say I want to run it at the organization level, or if I'm doing cost center reporting, so program reporting, project reporting, etc., I can have lists of my departments or projects, and I can create those quite easily. So I've got one here for Bob. He works for these 4 different, he runs these 4 different programs, and I can either give him a consolidated report, a detailed report, or both. So it's about having the flexibility to get that reporting that you want. excuse me, I can have different versions of my budget. So, the current forecast or the approved budget or different scenarios that we might be looking at during the year. And the account trees let us rearrange, group, summarize the chart of accounts. So we're not restricted to what is in the accounting system. And then I can do monthly, quarterly, all sorts of options. I can show KPIs, highlight exceptions, and that sort of thing. And the idea is that once you've configured this report to give you the right level of detail, the right components on it, so you don't have to do that ever again. You just go add to bundle, put it into a bundle, and have I got a bundle for Bob? No, I'm going to give this bundle to Paula, and I'm going to call this Bob's Reports report. Make that the title of the report, add it to the bundle, and there's far too many reports in this bundle, but then you can just move it up and down and rearrange it, and that's the basic concept of a report bundle. And the only thing you need to do then whenever you want to run that bundle of reports is say, I want to run it for June or July or August, and you go run bundle and it generates it. And then you can export it to PDF, you can export it to Excel, any of that. And this is the one I had earlier. You can add a cover page on it. You can add a document to do an executive summary. You can put notes on the bottom of individual reports, and etc. So the idea is that once you've created the bundle, and I'd probably create a different bundle for each person. So one for the CEO, one for the board, one for the finance manager, one for each department manager, and you can copy the bundle, make changes to it, copy it to the next person, make some more changes to it to customize it to their needs, because you've got that choice, you've got that flexibility. But unlike a spreadsheet, you don't have to put huge amounts of effort into it every time you want to do some work or make some changes. And so that's the quick overview of how Calxa works. Now, for those of you, I'm assuming you're all TechSoup or Connecting Up members. If your turnover is less than $1 million, we have a donation program that our friends at TechSoup and Connecting Up run for us. So there are some category criteria there, which I can never remember off the top of my head, but it's all on the Connecting Up or TechSoup website. And for those who don't qualify for the donation, they'll help you with a discounted subscription as well. So, and if you just want to have a look on the Calxa website, which if I can find a website, if you just go to, it's just calxa.com. There's a free trial button there. Under customers, not-for-profits, there's a whole bunch of information about how Calxa works for not-for-profits and some stories about some of our customers, and you should find most of the information that you need there. Now, so that's about it, except for questions. We got any questions, Tina?
We do have one question that's come through. Could
Yep.
you please explain the difference between a cash flow and a budget?
Yes. A budget is, in accounting terms, a budget is accrual based. And what we mean there is that you record things in the month that you get the invoice. So for example, if I'm budgeting for my telephone, for example, and every month I get an invoice from Telstra, and it's $300, $500, whatever it is, and that's what I would put into my budget. Now, the cash flow forecast is estimating when that gets paid. So I might get the invoice for $300 in July, but I don't pay it until August. So the cash flow forecast would show that telephone expense in August, whereas the budget would show it in July. And the other thing is that the cash flow forecast would generally show the amount as including GST, whereas the budget would show it excluding GST, because with the cash flow forecast, we would pay that $330 GST inclusive amount in August, and then we'd get a credit on the GST. And if we're doing our GST quarterly in September, that would affect the amount of money that goes to the tax office when we pay our GST. Let me know if that's either too complicated or not complicated enough. But
Okay.
basically, it's about timing. Yeah. Sorry, Tina. Yeah.
I know that's fine. I was just going to say that's all the questions that we had. John, if that wasn't a sufficient answer, let us know and we can get Mick to contact you separately to give you a more
Yeah.
comprehensive one.
Happy to do that.
Was there anything you wanted to add before we finish off?
No, I think it's, the main thing with end of year reporting is just to think about your audience and what they need, give them the right level of detail so that they can make the decisions they need to make.
Okay, great. Thanks, Mick, for presenting today, and thank you everyone for joining us. I hope you've all learnt a lot from the presentation, and if you have any questions that come to mind later or any feedback, please send that through to events@connectingup.org and we will answer those offline. Don't forget that the recording will be available on our website very shortly and a link will be sent to you, so keep an eye out on your inbox. Again, thank you for being with us. Enjoy the rest of your day, and we look forward to seeing you all next time. Thanks, Mick. Thanks, everyone.
Thank you.